This is FinTech Futures at Sibos, and I'm joined by Carl Slabicki of BNY Mellon. How are you?
Good. How are you?
Excellent. Very good, thank you. How have you been enjoying the conference so far?
It's been busy, but it's been great. A lot of good energy around the whole floor.
Excellent. Sounds good. So just to get started, then, we'll just give a quick introduction to yourself and your role then at BNY.
Yeah, great. So I'm co-head of our global payments team for BNY Mellon's Treasury services. So I manage a portfolio of payables, receivable services, ranging from our check services all the way through instant real-time payments within the US and the interconnectivity of such around the globe.
Excellent. So you're here to discuss innovations in the payment space then. To get started, I know BNY has recently just released a report on commercial payments. So what were some of the key findings then that you found from there?
So it was an interesting report, right? It kind of looked into the dynamics of payment adoption across the North American corridor as well as the European Union, and specifically business adoption ranging from check payments through legacy payment rails, high value, card, instant payment schemes, as well as digital wallet adoption, even cryptocurrency in the business communities, right? So all of these options are now available within these respective markets, but how is the adoption actually going, right? How many people are using it? Is it a niche use case? Is it really fully scaled? So some of the things that we found were pretty interesting, right? Especially within the North American and US corridor, checks and cash are still very, very prevalent, even though a lot of net new technology exists to really disrupt that and offer something that's instant, efficient, secure, and available 24/7. The tools are available. We still have a long way to go on adoption to actually implement it and get businesses to use it and bring the benefits of that down to the businesses and the consumers. One of the things that we found as well is that out of the newer payment options, one of the most fast growing use within the business community is actually digital wallets. So think about the ability for a business to pay a consumer using an alias, like an email or a mobile phone number, and digitally disperse money and just have it appear on their phone. Or offer them the ability to pay from a digital wallet to pay a bill, like a phone bill, utility bill, insurance policy, those type of things. So digital wallets are certainly on the uprise. Instant payment schemes are a lot of the hot topic and what a lot of the investment in the banking community is going into. And the benefits are there, and we're seeing some early use cases, but it's mostly niche at the moment, and I think we have a long way to go on the adoption there. So generally, the themes were pretty consistent across North America and EU. One of the things that we've just saw was, and this is kind of a dynamic of timing, the EU's been a little bit ahead, right, in terms of some of their new instant schemes have been around a little bit longer. The US only launched ours back in 2017 when RTP launched. So from a timeline perspective, you're seeing the EU kind of a little bit ahead of the US, but the trends remain relatively consistent, right? So I think what we're going to see is continued migration down kind of the newer digital path. Digital wallets will certainly be a big focus into the future. Cryptocurrency from a corporate business payment perspective was fairly minimal. There were a couple folks using it. It was less than 10%. They were actually adopting it or thinking it will be larger for business use into the future. So I think it's really just an adoption play. How can we get instant real-time capabilities in some of the digital wallets out to the corporate community so they can really benefit from it at scale?
Yeah. I mean, you mentioned RTP there as well. So how has adoption of that grown in the US particularly?
So the US RTP markets, it's kind of an interesting dynamic. We have 10,000 banks in the US, right? So we always knew the challenge was going to be, how do you get every bank on the RTP network so that every account holder can send and receive a real-time payment, right? And really make it a ubiquitous system. So as of today, right, we have about 275 banks on the network that represent about 62% of all the accounts across the US, which is pretty good, which means when you send a transaction over RTP, you reach 62% of all accounts across the country with those top 250 banks. So 5 years in, pretty good reach, supporting credit push payments, right? Paying business to business, business to consumer transactions. And we're seeing adoption amongst gig economy payouts, earned wage payroll, paying Uber drivers, delivery drivers, those type of things, cash outs from digital wallets. And we've been working on a really cool program over the last year and a half with a major telecom company to actually use the request for payment message to present a bill for people to pay their phone. So we can use the RTP network to actually put an e-bill in someone's mobile banking app that says, hey, you owe your telecom provider $100 for this month's phone bill. Use your Face ID to open your bank app and click pay, and that business can receive an instant 24/7 payment. So bank adoption has been pretty good. I think we're on track with where we expected. We still have a long way to go in terms of the remaining kind of long tail of banks across the country. Some of the cool use cases are starting with disbursements, but also on the receivables that we were a big part of. And over the next year or two, I think what we'll see is RTP will continue growth and adoption with more banks. I think we'll see a bigger emergence of banks supporting requests for payments and e-bills, and we'll see that as a mechanism for billing within in the US sector. And what we'll see next year as well is the Federal Reserve is launching the FedNow service. So there's going to be two systems in the US supporting real-time payments, the RTP network and the FedNow network. Both will have banks on each network, and there will be a lot of banks that are supporting both. Collectively, we'll get broader reach across a common ecosystem.
Excellent, sounds good. And what about the, I guess, cross-border applications then for RTP? Have you been looking into that?
So here at Sibos, the top question is, okay, well, what about interlinking these systems, right, and supporting cross-border real-time payments? I think there's a couple things that are going to play out there. One initiative that we're participating in is called IXB, it's cross-border real-time payments. It's a joint initiative between the clearinghouse in the US and EBA clearing in the EU, with SWIFT playing a role as well. And the idea is to take the RTP network in the US, which currently is domestic, the RT1 network in the EU, which is currently domestic, and link them, essentially. How can you let the European entities pay the US entities and vice versa, including embedded FX 24/7, leveraging those networks? That's what this initiative is going to do. We are part of a minimum viable service group, less than the initial press release said, about 24 banks. And we're planning to go live in the next couple of months to actually support that for our account holders, leveraging the framework of what we built. And that will be the first corridor that we connect with, which is EU to US, which is obviously largest kind of trade flows within the globe. So that's really exciting. And that's one initiative that we're going to use as kind of a minimum pilot to get going, to prove the model and potentially pivot it to other regions that are ISO ready, instant payment ready. Another thing that I think is going to play out is once those networks start changing their operating rules to allow instant payments from other international regions, we can leverage the traditional correspondent model to facilitate payments from around the globe that want to pay 24/7 into the US, right? So if the RTP network allows international settlement from foreign banks, we can go to our bank clients around the globe and say, hey, we have a great solution that can let you and your customers pay 24/7 instantly, full principal, and you know within seconds whether that payment's been done and completed. And this is a great way we can do it. And you can do it through Swift messaging, you can do it through APIs, but it really opens up those kind of 24/7 models from a global cross-border perspective. So rule changes is kind of one, and the traditional correspondent model, but then this IXB initiative is kind of an interesting one that's going to play in parallel that will also fix certain corridors together to try to do that more systemically.
Excellent. No, this does sound exciting. So, I mean, BNY Mellon specifically, then, are there any more kind of developments as well that you're working on in the payment space at the moment?
Yeah, so certainly focused on ISO 20022 adoption for some of the legacy rails. So in the US, our wire system is going through an ISO 20022 migration now, both on chips and on FedWire. We're planning and ready to launch the FedNow service next year to expand on what we've done with RTP and help our clients access both US RTP systems. I mentioned we're part of the pilot launch for IXB to facilitate real-time cross-border payments. And then the other thing that I mentioned too is that we're really focused on fraud and risk services relative to payments. So everything kind of we talked about is, all right, we're moving money faster over new networks, including international. That's great from an availability perspective, from a service perspective, from a feature perspective. We can't just get faster and more available. We also need to continue to up the fraud and the risk management that goes along with it. So what we're doing is we're obviously investing in tools that we'll use behind the scenes, but more and more so because we enable banks, we are actually going to expose a lot of those fraud tools, and we already are in some degrees, to give that to our clients to self-service their own risk and fraud management with the tools that we've built ourselves. So we're investing in the fraud and risk management. We're also exposing it to our clients in more of a self-service model so they can do more upfront risk management before the payments even become processed.
Excellent. Sounds great. Well, great speaking to you, Carl. It's been thank you so much for joining us for today.
Appreciate the time. Thank you.
No worries. Thank you.